Hello, everybody, and welcome back to the Real Estate Rundown. Today, I have the honor of having Marco Santarelli with me. He's been an investor for over 30 years. He's an author. He's been in Inc. magazine, Entrepreneur 5000. He's a founder of Norada Real Estate Investments. He is a national provider of turnkey cash flow investment properties. And his mission, here's the thing, guys, his mission is to help over 1 million people create passive income and wealth. Welcome to the show, Marco Santarelli. How are you, sir?
Shannon, I'm awesome. It's an honor to be here, and I'm excited to have this conversation with you.
Great. So, Marco, let's start with the basics. I always like to start with, where did you come from? How did you get started in real estate?
I got started in real estate at the age of 18 when I bought my first rental property. And a lot of people will say to me, well, wow, that's, pretty young. You started early. Funny thing is I actually started thinking about wealth at a much younger age. I just knew at a very young age that I wanted to create wealth. And I studied business entrepreneurship and real estate in my early teens. And it's kind of a geeky thing to say because I didn't even have a driver's license. I had to literally have my parents either order product online or drive me around to buy books. So, but I just knew what I wanted to do, right? And so I studied it and I made it a passion of mine. It was really a burning desire. So when I turned 16, I got a job and I saved up enough for the down payment. When I turned 18 and I could qualify for financing, I bought that first rental property. And then I just dove in. I fixed it up. I, put a sign out on the lawn. There was no internet back then, so advertising was essentially newspaper and signage.
Right.
And I finally leased it to someone, managed it myself for a number of years, and really that's where I cut my teeth. And it was, looking back, it was pretty textbook, but here's the biggest mistake and the biggest regret I have. And that is that years later, when that property appreciated and I knew there was equity in there, I sold the property, I took the equity, and I went off and did what I did with it. In hindsight, what I really should have done is sold it and did a tax-deferred exchange, taking that equity and leveraging it up into more properties to build my portfolio. Kind of young and dumb at the time, but again, it was where I started. That's how I got started in real estate investing.
Well, and Marco, the one thing that I know is there's no college courses that are going to teach you what that lesson taught you. That lesson smarts to this day. 30 years later, it still leaves a mark as to what you should have done. And there's no college class, there's no college credit that's going to give you that kind of a feeling all these years later. I have similar stories of my own that we could probably talk for quite some time of all the real estate things I learned by doing it wrong. But so let's talk about after that, and you kind of go down this path. You become an author. I mean, you're doing all these things. You're producing an incredible amount of content out there that people have access to. Tell us about that journey that's brought you here to today.
Well, when I started this business 16 and a half years ago, the core business of Norada Real Estate Investments, which for those people who are listening to this and they don't know what it is, we're a nationwide provider of turnkey cash flowing rental properties. So it's really everything done for you. It's the properties, the team, the management, the education, the counseling, the financing, everything that you could possibly need to be successful. When I started that business, people were coming to me when I was investing in 2003 and 2004 saying, hey, can you mentor me, coach me, help me out? Because I see you're buying a lot of property very quickly. In fact, I bought 84 doors in 9 months in a very short period of time. So, and those were mostly, 1 to 4 unit properties. So we're talking a lot of properties.
Yeah.
I didn't have the time to do that. And that's really how the business was born. What I found is that in the process of doing that, the more people I spoke to, the more they realized that I had the ability to explain things in a very clear, simple way. And so I just started writing articles, posting, putting out content. writing all kinds of reports and whatnot, market reports, investment reports. And then I started co-authoring some books, and now I have a new book coming out called Passive Real Estate Investing, which I plan to give away for free. So I just like educating. But, as you become more and more successful, you start to think, well, why am I doing all this? There's more to it than just that, just the money, right? It's like, what is my legacy? What am I giving back? And so this just all leads up to the whole big goal, that big, hairy, audacious goal. What is it I want to do? How do I want to help people? What is my legacy going to be? And that legacy is really this big goal of helping 1 million people. Now, that doesn't mean they're customers of ours. We have thousands of clients, but if I can educate someone and inspire them to take action, start, investing intelligently and building a real estate portfolio and creating passive income, which is what we're doing, then I've touched a lot of people. And my hope is at the end of it all, I've helped 1 million people improve their financial lives and become closer to that financial independence or financial freedom place that they want to be. And so it's really everything that we're doing is all working synergistically together just to help and spread the word and just educate and inspire people to take action and actually do something for their financial future and their families.
That's awesome, Marco. And, it's funny, the farther I get down into the syndication world, into the real estate investing world, it's a common theme. You don't hear stockbrokers saying, hey, you know what, I want to write a book and give it away. I mean, you just don't, right? The stockbroker is the one that says, I want to write a book. Not only do I want to sell you the book, but I want to charge you 3% a year for you to own the book, right? I mean, that's the stockbroker's model, right? But it's amazing because you're more concerned about your legacy. You're looking at what you can do to educate others, to help others, because the world needs smarter investors. The world is full of people that have been down the road of, well, this guy told me this one thing and it was supposed to work and it didn't. And, we've all had the conversation with somebody that invested into a course that was $1,700 that got them nowhere, and, this and that. And I'm not saying courses are bad, but seeing what you're doing and seeing that you're putting out the content and you've got your podcast and you've got, all these different ways to reach out to people and to get the information out to ensure that the general public, if they want to be a smart investor, all they've got to do is tap into the resources that you've created so that they can be a smart investor. Then once they're a smart investor, there's a natural choice that they'll probably wind up picking your product because it's a very intelligent choice, and that's a great way to go. But it's awesome to see in the real estate world where so many people take the time, like yourself, to put the content out. I don't know anybody else that's giving away a free book, though. So we're going to want to get some of those copies so that we can give those out from our point of view as well and to some of our people. Tell us a little bit more about what your business model does. When you're saying turnkey, it sounds like you've done everything. What brought you to that, and how does that model work?
So I won't take credit for the term turnkey. It existed before 2003 when I started using it, but I did start marketing the crap out of that term to the point where now it's kicked around by virtually everybody, especially online. So there are turnkey providers and promoters all over the country. But let's define that. The problem is even to this day, there's still no industry definition of what turnkey investing is or turnkey real estate investments are. So we wanted to basically define what that is. And it's different for everybody, but for us, it's not a rent-ready property. You can find those on the MLS all day long. For us, a turnkey real estate investment is a property that is new or like new, right? So there's no deferred maintenance. It's in great condition. You don't have to be doing any work on it. It's in a good market. It's in a good neighborhood. It's tenant occupied, cash flow positive, professionally managed by full service property management. That is the product. When you put one more layer on the onion and you work with a team, an entire team that can help you be successful in acquiring and building a portfolio of those properties, now you've got turnkey investments with a turnkey real estate investing experience. That's what I wanted to build, and that's what we built over the years. And like I said, I marketed the crap out of it, but still to this day, people really just banter around these phrases and terms like turnkey investments, and it means different things to different people. What's turnkey to you is not necessarily turnkey to me, but that's essentially what it is.
Now, the other thing I heard you mention earlier is you actually have financing lined up. So you've got a lender that you're working with, you've got a property management company you're working with. I can come to you as a busy person and I can say, Marco, I need something in the Florida market or the Texas market. And you go, yeah, we've got these options right here. We've already vetted them. They're already cash flowing. And the property management company is already in place, and here's your lender. Is it really that? I mean, you've got it that dialed in.
Yeah, the magic word you said was the word busy, because that's the word I use. We describe our clientele as busy people. You know, they've got a full-time job or career. Maybe they're running a business. They've got their kid's soccer game on the weekend. They have a family. They've got friends. They're doing things in the evening. They're doing things on the weekend. They don't have time to educate themselves on real estate investing at a deep level. What they would rather do is learn enough to know that this is what they should be doing and ask intelligent questions, and then assemble a team that's going to help support them to be successful. And that's where we come in. Now we've got, you know, the lenders. It's not just one of any one thing. We're in multiple markets. We have multiple lending entities. We provide, you know, asset protection attorneys, title companies, inspectors, obviously the product in every market. There's about 25 markets that we're in. So literally it's anything and everything that you probably need. Now, you don't have to work with the people we recommend. We'll vet them and we'll give you 2 to 5 names of everything and everybody that you could possibly work with. We'll introduce you to them and connect you via email and or phone. So we're giving it all to you. They're vetted providers. But at the end of the day, if you choose to work with a different property management company or go to a different lender for your financing, well, that's fine. You know, that's your choice. But the short answer is yes, it's all there.
Right. That's kind of like when your wife says, "Go ahead, honey, I don't care." You can do it, but it's not advisable.
Right.
So really, Marco, what you've got is when you say turnkey, I mean, you have the property management company. I mean, it's all there. The guy walks in, he knows exactly what kind of cash flow he's going to expect off of this deal. You said new or like new, so you're not dealing with, you know, older neighborhoods and things like that. So that's, I mean, are you when you move into a market, you must be, you know, taking on a pretty good chunk of real estate when you're moving in. I mean, you're in 25 markets across the nation. Are you doing 30 or 40 or 50 houses on an annual basis in that market? Give us an idea.
On average, it would probably be, well, it depends on the market. Some markets are very popular, like, for example, Kansas City, Indianapolis, Memphis, Tennessee, the areas around York, Pennsylvania. Those markets, we move a lot of product. Like, we're probably going to push 800 properties this year, you know, collectively. So, you know, it's a lot of product. Some markets, not a lot. And that's not because it's a bad market. They're all good markets. But sometimes there's just not enough inventory for the volume of business that we could bring to that market. So we have investors that are looking for product. There's good product in that market, but we're only getting maybe 5 a month out of a particular market. Whereas other markets, we're able to get to, you know, 20, 25, 30 doors a month, like individual properties. So there's the availability of inventory. But also, it comes down to you as the investor. What are your needs? What's your specific goal? Are you focused more on capital growth or cash flow? You'll always have cash flow, but sometimes if your goal is to, if you're in growth mode and your goal is to accumulate a portfolio and you want the capital appreciation, we're going to put you in certain markets and not recommend other markets. So that's why, you know, there's the diversity of markets. But at the end of the day, there's something for everybody. And they're all, you know, completely turnkey and ready to go and tenant occupied and all that kind of stuff. There's something you said before that maybe want to comment. Transparency. It's important when you're looking at properties and you're doing your due diligence, like with or without your help or our help. It's important that you actually analyze things completely. So when you look at the cash flow or pro forma of a property, you want to see that there's vacancy allowance on there. You want to see that there's maintenance and repairs. You want it to be accurate and complete. Sometimes people fudge those numbers or don't actually put them on the pro formas. And so your cash flow looks really attractive. But when you factor those out, the cash flow is still there and it's still attractive. But now you've budgeted for these things if and when they happen. And so we always give that up front. And we also tell people, make sure you're checking for these things when you're comparing properties from one place to another. Even on our website, like all the cash flow calculators that every single property has, when you click a button, it actually will show you there's 5% budgeted for vacancy allowance and 5% for maintenance and repairs. You can change those numbers, but they're there by default because we want you to see a true net cash flow number, not something that has been inflated by a seller that's just trying to move a property.
That is very true. And you see that as a market gets heated, people care less and less about that because they're jumping in, or, 10 years ago, real estate was not real attractive. It was, people were not wanting it. And now everybody's back to being in love with real estate, like it was 2005 again. So it comes and goes, but those of us that have been in it our whole lives, like yourself, myself, those are natural to us, but it's important to remember that not everybody has been in it as long as we have. And it's about getting good information to the people and going, hey, look, I get it. My deal doesn't look as sweet as his, but mine's a real deal. And that one might have some things in it that aren't true to what a real investor would do. And that goes back to your education, right? I mean, you're providing that education to the people. You're giving them that knowledge. You're putting it out there and go, you can change this, but the default is you're going to want 5%. Your lender's going to want to see 5%. You're going to want to put this in there because you're going to have the one that's going to have 8% vacancy. It's going to happen. And then 5% wasn't quite enough, but then you're going to have the other one that's only at 2. So, Marco, when you go into a market, how do you?
Well, that's actually. Sorry to interrupt, Shannon. What you pointed out is important, and that really applies heavily in the commercial space. When you're dealing with apartments and commercial loans, it's not as forgiving for the investor on the residential side because they're not qualifying the property and they're not doing due diligence on the property, saying, "Hey, did you factor out vacancy and maintenance and repairs and whatever else?" They're looking at you as the borrower. Can you personally qualify for the financing? So if you screwed up on your due diligence on analyzing property and you omitted that, and now your cash flow is razor thin or maybe negative, well, that's your problem. It's not the lender's responsibility to check that for you or to take on that responsibility. That's on you. So you're the one qualifying, not the property, when it comes to 1 to 4 unit properties in the residential space.
Right. And that is what most of yours are, is the 1 to 4 units, correct?
Yeah, our focus, unless we're doing a syndication of some kind, whether commercial or otherwise, we're involved in other kinds of projects, including like cannabis real estate type projects. Those are kind of specialty investments. They're still passive. You can come in as a passive partner or a note investor, but the main bread and butter are the 1 to 4 unit residential properties. Yes.
Okay. So when you're going into a market and you're wanting to value it, what are some of the key indicators that you look at, Marco, that says, hey, this is a good market? Like what was it about Kansas City that made you go, I like Kansas City? Well,
at the heart of it are 2 main things. One is the job environment. So are there jobs and is there job growth? So as long as there's jobs, a steady flow of jobs and job growth, that drives the next factor, which is population growth. And those 2 things provide demand for housing. So that's what floats, for the most part, the housing market. It creates the need and the demand for the existing units as well as additional units. So you need population growth, and ideally you want job growth. So that's the fundamental. The rest of it is what I call the story. So in Kansas City, for example, it is, they call it the crossroads of America. And the reason for that is it's a logistical distribution network of rail. So there is industry there, and there will always be industry there because people need rail to transport goods all around the country. So Cerner is a major employer there, and they've been growing and expanding and hiring thousands of people. So there's a lot of industry and growth from a business perspective. So that leads to jobs, that leads to population stability, leads to population growth, both organic, but as well as people coming in from other cities and states, to work there. And then you've got to look at the numbers. Is it an affordable market? Is affordability reasonable? or is it overpriced like San Francisco? So if you can buy a 3-bedroom, 2-bath home in the $150,000 to $250,000 price range, it's probably a good market. As long as it rents for about 1% per month of that purchase price, the numbers are going to make sense. So those are some of the things that we look at in a market. Clearly, San Francisco and the coastal markets don't make sense because they're what I'll call bubble markets, but they're very expensive, high-priced markets. The numbers don't pencil out. And even then, even if they were to pencil out, because they're so expensive and the land value is what's really driving that price, you have more downside risk potential. And so I don't like those coastal markets for that reason. They just don't make sense. They're a speculator's game more than anything else.
Because I've heard that, people go, well, what about this? This market's really hot right now. And you're right, it is. Nobody's going to deny that. But are you smart enough to know exactly when to get out before the market goes lukewarm and then suddenly cold? I remember, you remember as well, when the dot-com bubble burst, how cheap you could buy stuff in Silicon Valley immediately after that, back in the 90s. It was a bloodbath. And that was because you were speculating, you weren't being a real estate investor. And there's a big difference that a lot of people don't understand, the difference between being a speculator and being an investor, and what that difference really is, and how the whole thought process behind that is completely different. So when you're walking people through what you've got for a process and they're seeing in your education, obviously you've got spreadsheets, you've got information. What are some of the other things that you've got available to people on your website and in your portfolio of education that is going to get you to that million people?
Well, we always have about 20% of available properties listed on our website. They're posted there with notes and very, very detailed cash flow analysis that goes out 30 years, starting from year one. Plus, we have neighborhood information like demographic and trending information. So we actually pull and aggregate market and industry data that comes in and shows you, what the neighborhood's like in terms of income, the percent of owner-occupied homes, the types of jobs in the area, all that kind of stuff. So you actually have a world of information there. Plus, we can supplement that when you're talking to your investment counselor here with additional information. So that's the property side of it. The information side of it is really just the content we put out on a weekly basis, actually 3 times a week on the podcast, articles that are posted a couple times a week on our blog. There's two websites actually, so the content we put on both blogs, and the reports that we come out with from time to time, and then the upcoming book. That's just the content. But your audience needs to understand that there's a ton of good information out there, and most of it is free. And the stuff that's not free is called a book that you can buy for 10, 15 bucks, 20 bucks. There's no reason, no excuse that you cannot be educating yourself for free or very, very inexpensively. And if you're not investing in yourself, because that's what this education is, you shouldn't be investing at all, because it all starts with you and your mindset. You have to start by investing in yourself. Otherwise, how do you expect to grow and be successful and financially independent?
I'm smiling because, it's the real estate market. It's the people like yourself that are concerned about people's mindset. Again, if you're investing in crypto or you're investing in the stock market, you never hear anybody talking about mindset. You've got the Tony Robbins of the world that tell you, hey, you need to invest, but you don't have the guy that's telling you how to do Forex trading, telling you, hey, you know what? You need to work on yourself. You need to make sure your mindset's right. You need to make sure that you're in the best positive space to be able to make these educated decisions about what you're going to do with your financial future. I can't help but realize that real estate has got some of the coolest people in it because of what they're willing to do to educate other people like yourself. You're putting out content out there that is free, that you're putting out there that is solid, that is backed with science or financial data, if you will. And I can't help but think that I'm so glad I could be a part of something like this, where people like yourselves are really taking the time to bring it to people and put it to them like that. Now, obviously, I want to talk about your book, but before I do that, I want to ask you, what was your number one favorite real estate book that you got to read of somebody else's?
Well, whenever I get asked that question, I find it difficult to answer because there's no one favorite. So what I end up doing is I break it up into two parts. If you really want to start from the very beginning, what kind of that foundational book that changed my mindset, and I'm sure you've heard this 1,000 times, but it's Kiyosaki's Rich Dad Poor Dad.
Yeah.
That book is just very foundational because it really puts into perspective a lot of concepts that are misunderstood, like the difference between an asset and a liability. People thinking that their home is an asset. Well, it's not. It's a liability. It's taking money out of your pocket, not putting money in your pocket. So really, that is a great starting point. I would say the precursor to that is not a real estate book, but the book Think and Grow Rich. There's a reason why it's called Think and Grow Rich, to your previous point. It's not Think and Be Poor, it's Think and Grow Rich, right? But there's many great books after that. Like the whole Kiyosaki series of Rich Dad Advisor books would be a good second choice. So as far as favorites go, that would be the continuation, is that series. Or Gary Keller's book, The Millionaire Real Estate Investor. It's a blue book. It's about an inch thick. It's great. It's a little scattered. It covers a lot of topics. But again, it just brings in this world of mystery all together in this nice basket. And so it's a good read. So
Yeah.
those are the two picks.
And I'm very proud of myself. Everything you mentioned, I've read, and you're correct. Kiyosaki, it's nothing new. It's just a new way to say it. The way that he goes through and explains that, and the way that comes across. I remember reading that book in my teens, 18, 19, when it first came out, and I recently reread it, and it's funny. I still got more out of it all these years later, but I want to talk about your book. I want to talk about, what this book is about. This isn't your first book, but what was your thought process behind writing this, and what's the content of it?
Well, so there's books out there that are beginners, intermediate, and advanced books. And when I first set out to write this book, it was over 5 years ago, it got tabled multiple times. It had a little bit of everything, and it was just too much. And I gave it to an editor, and she said, there's too much in here. You've got to split it in half and take out the other stuff that is really more of a part two, more of an advanced type of topic, like tax strategies and other things like that. So really, I have kind of a beginners to intermediate book, and it's meant to be both educational as far as tactical and technical, but inspirational at the same time. And that itself has been kind of rewritten twice now. So I have it in a final manuscript, and I've literally been given an offer by two book publishers out of New York that have given me a written offer to publish the book, and I've turned both of them down after 30 days of thinking about it, because I wanted to control the book. I wanted it to be my book, and I wanted it to be something I could give away for free if I want to give it away for free. Whereas with them, I couldn't do that. I had to buy the books from them at whatever, $8, $6 a copy, however much it is. And so I didn't want to do that. So anyway, it's a book that's geared towards, the beginning part is really what probably a lot of people already understand, the fundamentals, the difference between a single family and a fourplex and all that kind of stuff. But it gets into things. Really, at the end of the day, all I want is people to be comfortable with real estate, not fear real estate and investing in real estate, and be inspired to actually move forward and build something that will create passive income for themselves and create wealth, not just for them today, but for their family tomorrow and their heirs down the road. That's really the ultimate goal. And if I can give that away, for free, as a download, and if you want the paperback, it's just, pay the shipping. I'll pay for the book. You can have it. That's what I intend to do.
That's awesome. I can't wait to read it. I'm definitely wanting the paper copy. I'm kind of old school that way. I really like to get my hands on it. That way I can underline it, I can reread it. My mind's not what it used to be. I thought I heard that differently, but what is so you mentioned one of your early regrets early on in the podcast. What is one of the things that you want our listeners to take away as one of your early successes that really kind of cornerstoned your real estate experience and just really solidified the fact that you were understanding it and you were moving forward with it? Just something that was a win for you on that in your early days.
I really think the most important thing is this. How many people do you know I know for sure that talk about the things they want to do, and they use the words "I wish" or "someday." Right? We all have these ideas and dreams, and so many people talk about and even think about, some people don't even verbalize it, but they think about the things that they want to do or that they will do someday, like real estate investing, and then they never do it, or they do it so late that they look back and they regret not starting earlier. The whole saying of when's the best time to plant a tree? Well, it was 20 years ago. When's the next best time to plant a tree? It's today.
Right.
So the whole thing about taking action is the thing that really kills people, because they know they should be investing, they know they should be learning something about it, they know they should be talking to somebody and, again, building a team and working on it. They know they should be accumulating the down payment, but they don't ultimately do anything about it. So taking action is the game changer. The difference between someone who's actually successful and someone who isn't is the guy who's successful actually took action. Now, guess what? They may have failed, and they may have failed multiple times, but if you can fail fast and fail forward, you will get back up and do it again, and you will succeed. Maybe not the first time, maybe not the second time, because I made my fair share of mistakes. I've been ripped off by contractors. I've been ripped off by contractors and property managers, and you name it. But you know what? It didn't stop me. I kept taking action, and I got to the point where I started to create something that's meaningful. And really, it's all about action.
I didn't go to college. I went for a little bit, and then I realized that they wanted me to attend classes. But when I have one of those things where I get ripped off, or it didn't go the way I wanted, or I fail on something, I always look at that and go, well, there's my college course. I'm now in my master's degree of failing on things, and
Yeah.
I look at it different. It's not a failure. It's there was two choices, and I made one, and now I know why I'm not going to make that one again. And for people, a lot of people, they look at it and they go, dude, if I fail, it's a fail. I can't fail. Failure is horrible. My dad, I remember my dad told me when I was a kid, he had a good friend of his that played Major League Baseball for the Oakland A's. And he said, man, he goes, that guy strikes out more times than he hits. So if you can do that,
right,
like a baseball player, and you can get a 333 batting average, which is every third time you hit it, you will be making millions of dollars. And if you do the same thing in real estate, it's the same thing. And so what you're saying is so true. And it's all about getting there and making the commitment to do something instead of wishing something would happen and wishing for the future. And I think that's the big difference. Where do you see real estate going in the next 2 to 3 years as we're going through? Everything's changing. Everything's always changing in real estate. But where do you see us going in the next couple of years?
Well, I don't see interest rates going up or up much at all. So we are going to be in a low interest rate environment for a long, long time, because they just can't go up. We don't have a free market, and we need these low rates to keep the economy moving, even though it's been kind of ground to a bit of a halt lately with the government intervening and essentially shutting down a lot of the businesses, which is unprecedented and unheard of in history. Number two is we have a strong fundamental demand for housing in this country. It is a basic need. Maslow's hierarchy of needs: food, shelter, and clothing. We need housing. We don't have enough of it, so it's not going anywhere. We're not going to start living out on the street or under a bridge anytime soon. So housing is always going to be in need. More people are starting to move out of the house because, number one, they're getting tired of being cooped up with everybody that they live with because they're in self-quarantine. And number two, millennials are getting to a point where they are going to start getting married and moving out, and they're going to want their own household. So that's creating additional demand to the existing demand for housing that we have in this country. Compound that with the shortage of housing units that we have in this country, which is lagging behind anywhere from 750,000 units a year to 1.5 million units per year. All that leads to increased demand for housing, and we have a housing shortage. So I'm very bullish on housing for the next 5 to 10 years. I don't think we're going to see the end of the world anytime soon. And real estate just makes sense as an investment. Even if they were to pull back some of the tax benefits of real estate after the election, which God forbid, I hope they don't. But if that happens, real estate's still a favorable asset and one that performs better and provides better returns than most other investment options out there.
What I heard is there's encouraging news for those that can't get their millennial out of the house. You say that millennials are wanting to move out now, which is awesome news. Millennials that have got used to staying in the basement and everything. But that's a great insight. And I everything I hear you saying, knowing your website, knowing everything, all the information that you're producing, I can go in there and I can check all that out, and I can see that that's not just your opinion. That is a real fact-based opinion. And so that's really great. I really appreciate you bringing that to our attention. So last question I have for you, Marco, is where can everybody find you? I know where I found you, but where can everybody else find you in the World Wide Web?
Well, Shannon, I appreciate you asking, and thank you. So really, our two websites is the best place to find me and my team and everything that we've just talked about and then some. So the two websites are noradarealestate.com, Norada, noradarealestate.com. The sister website is passiverealestateinvesting.com. It's basically named after the podcast and named after the book. It's just the domain name for it. So those are the two places.
Awesome. Well, Marco, I do want to thank you for coming by and sharing your knowledge with us. It is amazing that I'm so blessed that you took the time. I know my listeners are too, to really kind of give us the information that you've taken 30 years to acquire. And I really look forward to that book coming out. I can't wait to get my hands on some copies of that so I can pass that out. And I really just want to say thanks again, Marco, for joining us on the Real Estate Rundown. Guys, join us again soon for more guests like Marco, not quite as to the point and on it with data, but I really want to thank Marco for being that guy. He's always got the data for us. Thanks again, Marco, for joining us.
Thank you, Shannon. I appreciate it.